We've got Keshav calling us from Tamil Nadu. Hi Keshav, good morning. How can we help you?
Hi, good morning. Thanks for this call. I need one information regarding this Waaree energy.
Okay.
I'm planning to hold for 1 year.
Okay.
The query is, right now, my average is 2801.61.
Right.
So can I accumulate in the meantime, or what shall I do next?
And you've got a 12-month time horizon. When do you acquire these shares, Keshav?
I think since September, I would say.
And you've accumulated over a period of time, right?
Yeah.
Got it. Kush, it's seen a beating, and in fact, quite a few of these stocks have. But would you suggest the prospects for the next 12 months are good enough to suggest a hold and even accumulate at these levels?
Alex, I'd like to toss it over to Samir, just because from a long-term view, the data is fairly limited, only 3 to 4 months of data on this one, maybe a little more, but not enough for a long-term view, I'm afraid.
All right, Samir.
So, Waaree Energy is one of the stocks that I would probably avoid at this point of time, for the simple reason that they are very focused. They have focus on export market and the US market in particular, where Donald Trump has exited the Paris Treaty, which is setting up of renewable energy in a particular point. So we are going to see more of reduction in the subsidies that the US government gives. So that profitability for Waaree Energies is going to take a bit of a hit. Now, if you want to be in the renewable energy space, one more thing, they make solar panels. So now when obviously reduction in demand comes to solar panels internationally, they have to cut prices to sell it maybe in other markets like India or wherever else. So the profitability for Waaree could come under some pressure. You want to play a space in the renewable energy space. There are EPC players in India, or there are players who cater to the domestic market. So I'll give you two stocks. One of them is Sterling and Wilson Solar, which is part of the Reliance stable. They are pure EPC manufacturers. So you give them an order, they tender for it, and they earn about a 10% margin on setting up the business. So their stock price is corrected from 800 to 300 because of the reduction in guidance in the current year. But the guidance for the next year remains strong. It remains at 10,000 crore turnover. And if they're able to deliver that, if we extrapolate the profitability that can be generated for that, it's trading at close to about 24 times earnings, which is actually quite reasonable given the growth opportunity that lies there. A similar company in India is another one which has also seen a huge correction, is KPI Green Energy. It's a Gujarat-based player. Now, where they differentiate a bit is they own the land. So what they do is they don't set up these huge parks, but they go to players who want to set up small capacities. They set them up on the land that they have, and they charge a rental, and they charge a fee for setting it up, and then they charge the O&M. So they have 3 streams of revenues that come from them, from rental income, from setting up of the EPC part, and then the O&M. So that business also will continue to see scale up. So the smaller companies who can't set up these huge gigawatt plants can go to them and get it done, and they're able to generate renewable power at a decent price compared to what they're probably procuring from the grid. So that is another opportunity. You've seen a good correction over the last year or so. That would be something that one could look at. These are the 2 stocks I would recommend over Waaree at this point.
Okay. All right. So I didn't interrupt you because you were giving us such a comprehensive view, and this is useful for everybody tuning in. But we are completely out of time.